And now I'm coming to the second hot topic, which is base erosion and profit shifting. Because I think it's linked to the perception by governments that they have an issue. It all starts with the financial crisis. And you know, it's not by accident that the G20 paid attention to this issue of tax havens when it started at the level of the leaders on the 15th of November 2008. Because we had the Liechtenstein scandal in February 2008. And what is interesting is why a scandal works in terms of policy making. Because you have scandals every day. Most of them, I mean, you have one article in the press, it's over. There it worked. And it worked, in my sense, because in February 2008, we were a few months after the subprime crisis started. It's August 2007. It's, you know, the check and balance of the perception of the input to growth by the financial industry. There are doubts growing there. And the governments can feel like they will have to intervene. Growth is no more here. They are concerned. And that's how I think we had the political attention. On the BEPS issue, it's more or less the same. We had the financial crisis, which has translated into a budget crisis. You saw the figures. They are impressive. I mean, in the OECD, the average deficit is above 5%. 5% of GDP of deficit. I'm not talking about debt. The governments have to pay it back. It's awful for them. They need to collect money. They are increasing taxes almost everywhere, including in the fast-growing countries because they are developing countries or emerging economies and they have to fund their development. They have to fund the infrastructures. So taxes are on the rise almost everywhere. VAT has increased in 25 countries in the OECD, out of 33 countries having a VAT system. 25 of them. And who does that hit? Well, the man in the street or the woman in the street. I mean, the middle class or the poorer. And the governments cannot afford, at the same time as they're increasing the taxes, to see in the press, in the front page of all the papers, that large multinationals would have effective tax rate of 2, 3, 4, 5%. And I'm talking about the profitable multinationals. You've all heard about Google. You've all heard about Starbucks, and this was on the front pages in the UK, but not only in the UK. And the governments have then a serious, long-term political issue. It's not only about collecting the tax that they badly need, because the markets are telling them, well, you need to pay the interest and the capital back. So you need to collect your taxes. But more importantly, it's a political issue because you cannot report to your people. You need to be re-elected. And you cannot say, I'm increasing the tax for you, but not for the others. For those who are exposed to international transactions, there is another price. Not possible. And in addition to that, it would undermine the confidence of taxpayers in the fairness of the tax systems. So they need to act. And that's why we have this strong, heavy political push to address the issue of base erosion and profit shifting. To put it in other words, to put an end to double non-taxation or to stateless income or to less than single taxation. You can call it the way you want. It's the case where the profit is located in Bermuda when you have a US company operating in Asia or operating in Europe. It cannot be based in Bermuda if there is no real activity. At least that's what a finance minister, budget minister, who is in charge of collecting the taxes or doing tax policy, would think. And that's what they are thinking. And when you explain to them that, well, you have complex transfer pricing rules which actually would allow the owner of the brand, as long as it's funded by money coming from the headquarters, that it's fine that all the returns go to this subsidiary legal separate entity which is in Bermuda or in Singapore or in Hong Kong or in Luxembourg or in Switzerland or in the Netherlands or wherever you want, that they get all the profit. Politicians just don't get it. And what is interesting in my sense is that it's the first time that politicians get involved in international tax policy. International tax policy has been left to us, I mean, to civil servants who were meeting twice a year at the OECD to change a few words in the Model Tax Convention or in the transfer pricing guidelines, to change sometimes a period or a comma after long discussions. And now you have politicians saying, just fix it. Doesn't look right. Fix it. So be aware of that political pressure which is around and will not be away until some time. And I think it's also good news that we do have some policymakers being interested. It's always scary because explaining transfer pricing rules to a minister who have 5 minutes to listen to you is not that easy, and it's dangerous. And that's why we think that we need to bring political input, technical input to that political debate. And that's, I think, what the OECD is about. Now, what's wrong, or how come are we there? The temptation by governments is to say business is bad, especially in rough times, rough economic times, tough economic times. You say business is bad. That's more or less what the UK has done, while putting in place a very, very attractive tax policy. 20% corporate income tax, patent box taxed at 10%, no more CFC legislation. Wow, looks like a tax haven. But at the same time, they say we want to put an end to double non-taxation. So easy to say, well, let's tell Starbucks that they should smell the coffee and wake up. That's what Cameron said at Davos. What we are saying is that, actually, no, the business is doing its job. Optimization, planning is fine. That's your job to do it. The problem is that if the governments are not happy with the outcome of planning, which is legal, if they are not happy with that, they should change the law, not put the blame on the business. And that's what we're saying. If you're not happy, let's change the law. What does the law mean? It means that we need to think of the transfer pricing rules. We need to think of the tax conventions. We need to think of areas which have not yet been dealt with by international tax,